Well, we got a real battle going on here. We're doing these undercuts and then the rallies, but are we going anywhere? And that's really the question. We're at the same exact level we've been. There are some really interesting developments out there, though. The S&P futures market is holding that level where Powell came out and said we wasn't sure what he was going to do with rates, and you just see how we're following that line. What's crazy about this line is if you start to take a look at how far we've moved off of it ever since we've broke, we're really not going anywhere. I mean, if you went from peak up here all the way down and you just took that level from there, you're right around 1.68% in the past 2 days from peak to trough. What's crazier about that is if you just take the movement from here over on Tuesday through Wednesday, just literally from here over, take the drop, and then that was it. After that drop, we have not gone anywhere. Take the peak of that and the low of that and realize you're at 82 basis points range for the past 2 days. We're not going anywhere. So the market's obviously waiting for something. But there's a little bit more going on under the hood. So if we look at the cues here and we watch this level, this is where Powell came out and made his famous statement, market drops, they rally and they mark us at the end of the quarter, as we talked about on Twitter and we talked about in these videos, that they might do that. Now, let's take a look at this. From that peak where the market has closed, after this announcement, we have never come close to there. So what we're seeing is we're seeing attempt after attempt after attempt. And I have consistently been shorting this level, and sometimes it's going okay, and sometimes we're just sitting there. But what you're seeing today from the second on, this morning when we were live trading, we knew that this was an area that, hey, we have to watch how this is going to play out. We traded right into it. You could just see it, bonk, 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 and then we just did it again and just complete utter rejection. But we are seeing that rejection up here as well, right off of that level. So if you are somebody that is looking for key levels and you're looking at the NASDAQ, you just might want to remember that you're really struggling here and you're really struggling down here. And I'm just going to mark off how to look at this. So what you want to do is mark off down here where you've hit now 3 times, unable to close. Instead of marking that off, what I would do is that open close area and then look at how we've been fighting through that. Maybe you can get through again, but even when you're getting through, let's take a look at this. You're just getting Matumbo'd. Complete reversal there, straight across Matumbo, Matumbo, over and over again. So that is the key areas. Now, what I do like about this is we're working it off, and some of the leading names actually bounced today and formed reversal. But does that look like something you should feel warm and fuzzy about? I felt warm and fuzzy before. It's not because it looked like this. And what we're seeing are just classical signs of a possible top, right? And we would argue that, like, yes, you're seeing signs of a possible top, but it's interesting what smart money and dumb money are doing, and we're going to go through that here. But let's just click on this for a second and take a look at this here. If we go and take a look at here and here, they're walking us down, and we can all see that they're walking us down, right? But when we're breaking down, we're not really breaking down. We're just holding these levels. Now, that's obviously the Powell put area where he just killed us, and we've been unable to get above it. But if we come over here, drop this, and then click on this level for a second and just come straight across, all you've done is gap fill. And what you've done, you've worked off the oversold on the hourly and you're back to neutral. So you haven't really flipped or done anything on the RSI. Look at the RSI on a 4-hour, and we will be spending time on this. I'm going to clean this off. And just, this is really important to get. You don't have to break. You could just work it off and go to neutral. Well, that's what you did. You worked it off and you went to neutral. Now, I do like looking at past times and saying, okay, does this happen? So you can see this, because I really look at past performance. Here's one time where you were up there, you got to neutral, and you worked it off, and you bounced. Usually that's not the case. But there are times when you get up here, you work it off to neutral. Usually after something like this, you don't just go to neutral and reverse. Go to neutral and reverse. Sometimes, yes. Other times you crack like an egg. And are we doing that? No. So I'm going to give you an area that I think is really important for you to watch tonight. I really think you got to watch what happens here on this 4-hour chart. And I'll show you why I think it's so important. If you go and take a look at this, and what I'd like to do is I personally don't use the MA. So we're just going to take that off, click it, and go from there. What you would want to do on that level right there is you just want to be notified of it. So I will go out there and just put a little alert there for it to go off if I'm in the middle of something or if it's something that I've forgotten about. Because if we break that and you make a lower low, well, then I think you have an issue. But if you're not going to do that, like for example, you did this here at 130 and then it took, and just so we're clear on this was Wednesday the 28th. And by the time you got over there, it was Friday at 130. So you might see action like this and then crack, right? We want to be aware of that. Now, why would I mark that off instead of just marking the bottom of that bar? Because I could get a negative divergence, and that would give me an edge. In other words, if I crack here right? If you start to roll here, like you did here, before this pops here, well, then you have an edge. Okay, and this is a 4-hour chart, so that's why I would mark that. You, of course, looking at this chart, would realize that if you broke that area right there, you would, of course, want to mark that off and add an alert there as well, just in case, so you're notified of that. But if that breaks and people aren't paying attention to that, right, it gives me an edge over other people, which is what I want. So what we have here is something that's really worth paying attention to. And we are seeing some, I'm going to say bifurcation. I'm going to use that word because I don't get to use it too often. But you're seeing it here as well, where you're holding here. Now, semis should have been a bloodbath today because KLAC, Lam Research, and some of these other names, they came out and they were cutting the earnings estimates, and you can't tell me it's factored in because it hasn't been. There's no one that thought Semicap was going to get their earnings cut, and they did. Not a lot, but they did. And what you're seeing here is the same exact thing, right? Hit that 4-hour and bounce. Go take a look at this on the hourly. And we don't have a market without what? Without semis. You just don't. In tech. You can be biotech for a while, but it really becomes interest rate sensitive, and maybe we're going to get there eventually. Doesn't look like it yet, but see how we're breaking on the hourly? So we have to be aware of this. We want to know where these areas are, right? These are pertinent areas, especially with non-farm payrolls coming up. And what I'm trying to do, guys, is give you a bunch of technical stuff to watch. So you're going to see that this video may be a little technical than some of the others just for tomorrow. I think you're hitting a crossroads. I think you need to pay attention to that. I think you're at a real big crossroads right here. And we could see some, I'm leaning towards that you're setting up to roll here into November, and then we'll figure out what we're all going to be when we grow up after November. But then I'm seeing stuff like this where we're working it off on the stocks and watch. And this is why it's so important to look at what's happening and not have a bias. I'm going to show you a really great example of this today where I was short something and long something and both worked. And I know a lot of people don't like to do that. I don't really care. I do what works for me. You should do what works for you. This is a 12, a 22, and a 55. You should use what you're comfortable with. But here's the cool thing about this. You see that undercut right there? So we undercut the 55 on the stocks and we held. So now if you break this in some kind of 3-bar pattern to the downside, well, you know you're hosed. So now you know what level to really watch, right? But you held. So then you start looking at this and going, okay, well, what about this? Well, we're starting to break here, right? Where yellow and then here's red and you can start seeing the rolling, right? The rolling is beginning, okay. But then we're not really breaking. So we want to watch this because here's the 5, here's the 3, here's the 8, but they're not in any really discernible order. In other words, I need the 8 up here, I need the 5 and then the 3, and then I have a problem like I did here, right? Once they cross like that and they realign, that's when you have to start being suspect with it. And when they start up like this is really when you start getting heavy and look at trading on the long side. But wait, there's more. Watch the video. Watch how the video is just sitting right here, right? As these are starting to set up. And I just want to point this out to everybody. You're going to want to watch this whole area tomorrow, this 120-30 area, right? That is a huge area. It's actually marked off by a couple other things. If you take a look right here, you'll see that you have a bunch of wicks right in here over and over and over again in this area. And it ties directly in with the 8 and the 5. So you're going to want to watch that area very, very closely. End of the day, do you have an issue here? Well, look at this drop, undercut from here, right, to flush, and then up. And this is the kind of stuff you really want to watch. And yeah, I do get this specific about it, but this is textbook gap and go kind of stuff. Where what they do is everyone's going to use the lower low as their stop, right? We all do it. Well, not everybody, but I try not to do that because it's like that's just stop hunting, right? Same thing up here for shorts, same exact thing. And they just got everybody at the end of the day. But watch. If you look at this and you watch that area, what did they do? Rallied you up, got everybody in, feeling warm and fuzzy, undercut the lower low. Well, clearly I need to get out of it because it's going lower. Maybe I'll buy puts, right? How'd that work out? All right. So, and then they just rip it higher into the end of the day. When do institutions buy? Last couple of hours of the day. And then look how we did. Does that mean you're going higher? No, it doesn't mean you're going higher, but it does mean that you did the undercut and that you held. You would only do that if you were looking for supply. The only reason market makers would do that or institutions would do that is if they're looking for supply. Other than that, they're not going to do it. Okay, so what you'd have to do is look at this level like here and see that, okay, well, now I know where that area is. So now you know you have 2 core areas in here that you'd like to watch and see how you respond to. I do like this, and I'll show you a couple of reasons why I do. I know you're at a crossroads. I don't think you're at a crossroads. I know you're at a crossroads. And what I like about them is at least we'll know. there will be no more guessing as to what's going to happen. But we have this pattern that's very similar to what we had before with Tesla, and we've showed that ad nauseum. I'm not going to bore everybody with it again. And then if I come here, if I use that, great. If I get super tight like that and you say it, great. I don't really care how you look at it. You're splitting hairs. But let's just use this. You're getting to a point where something's going to happen. And you're like, gee, thanks, Boomer. There's no way that that's just going to continue. You're going to have to pick a side. So if we take a look at NVIDIA, and as goes NVIDIA, goes the market, you have a couple names out there that look really good, like really good, that have absolutely nothing to do with NVIDIA and semis. But if I just drop that 50% line from that peak to that trough, look where you're sitting. Just look how that's all you're doing is having a battle going. They undercut it today. So from this peak over, just by looking at that, do you have net buyers or sellers? You have net buyers. You had net sellers in here over and over and over again from there. Flips to what? Net buyers, tries to break out, can't. Undercuts today, holds. Oh, wait, there's more. If you go and take a look here, watch this undercut. Look at this. Look how perfect this is. You actually undercut, test the 55, test the 22, right? I use a 12, a 22, and a 55. You should use what you're comfortable with. But look how you held in there. That's just perfect. So what we're seeing here is, are we really going anywhere? And the answer is no. So maybe we're waiting for non-farm payrolls. Maybe we're waiting for China to open up and see if this move is real or how real this move is, because we're in that golden week, as they refer to it on the China names. And while this keeps running, and moving, which it is, of course, doing, look at the volume that came in today. What's going to happen when their markets actually open? Right now, we don't have access to their markets. They're closed. You have the Hang Seng that's open, and we're seeing this kind of movement. But it just seems to me like, I don't know, we're trading it and a bunch of people are trading it, but you got to be there for the gap risk, overnight. And really, you're seeing a lot of that. I might as well walk through this now while it's on my mind. Just be aware of this. We've been talking about this in the community, and I did bring it up today in the public pre-market, and I would watch those. This is Asia at 4 o'clock, and you can see what they're doing, right? They're getting everybody giddy, and then they're dumping it. Getting everybody giddy at 4 o'clock, and then they're dumping it. They've been doing this over and over again. The opening is becoming the high, and that's what they're doing. They're gapping us up. This is very similar to what the U.S. does to Asia, by the way. If you ever look at our names, they gap them up, then those guys tend to get in when they shouldn't after we gap them up, and then they don't see those areas. It's the exact opposite of what usually happens to U.S. stocks. So it's kind of interesting to watch, but we're panicking because most retail investors don't have access. So what you have to deal with is just gap risk. And I don't know a lot of people that are comfortable with this, but, I personally am not comfortable just, hoping and praying. Gee, I really hope it works out tomorrow. But especially when you have moves like this, it makes it hard. I've been looking at some of the index funds, but even some of these guys that, to me, at this point, maybe it opens up 5 tomorrow, maybe it opens down 5 tomorrow. I just don't know. I guess if you have enough of a cushion, you just let it ride at this point, and assume that it's going to go higher, which it should, but, there'll be some kind of give. I'd also just watch, guys. You're getting to a point on volume where, how much is left. Like when you have what's called exhaustive buying, where after everybody finally piles in and throws in the towel, like it just becomes a level of exhaustion, just like exhaustion selling. It's no different. Like here, see how you have like this big area of selling, and then after a couple days, like that was literally the bottom. Same exact thing. So you always want to watch stuff like that. You want to watch for periods of exhaustion. People will always say, oh, it's good when you have like more volume. Yes and no. And when everybody's like, that's it, I've had enough, get me in. Yeah, there's no one left to buy. Just like when you have areas like this that pop out of nowhere and it's exhaustive selling, right? And then no one's left. There's nobody left. Now you have a change in sentiment here that's huge and it's real. And I do like this longer term, but there will be give, and stocks, believe it or not, do go down. So I think that this is important. And I would tell you to continue to look at it and certainly trade it and go from there. I do want to walk through a couple of things that are going on out there that I think are really interesting. So this Humana trade, I'm going to clean this all off for a second and just show you this. So last night or yesterday, I shorted this into the close and I covered it before it gapped down. I made very little on it. I'll show you what I was doing. I was just watching it into the close. And you could see this little rally and then it popped and then it just got my attention. Just off the movement, I'm like, geez, was it really that bad? Was the news that bad? And then when you read the news, yeah. So there's a product that they have that's tied to, and I'm going to butcher this, but just bear with me and you can go look at the news. But it's tied to a star system. Their star system for 2024 was 94% and a 4-star. Now it's 24% for this 4-star, and the other one is now 3.5. Apparently that is like really, really bad and has to do with their reimbursements and everything else and their cost structure. And it's not something that I fully understand, but I note enough to read notes on it and that it was bad. So what came in this morning when we we drop like this. Actually, even what's crazy is even off the open right here, we made money on puts. I bought the 220s and 200s because I thought it would get really bad. And all it did was drop. I mean, I'll show you the trade. It's super simple trade, but it was crazy. Like just out of nowhere, just literally just opens, tries to rally, pops, and then that was it. Very simple, very easy to do. But what got me later in the day, and I'm gonna show you how to do this. So whenever you have movement like this, you wanna know where everybody is, right? You always wanna know where the players are. So first thing you wanna do is mark off when that news came out. So very first thing you always do with an anchored VWAP. When did that news hit, right? And that news, you can see that right here is the previous day. That's exactly when that news hit. And then you can see this drop, right, in the morning when that news 6:40 when it comes out. And you can see how that starts acting on the market right in there as well. Now, the other area that's always of interest for people to look at this stuff is they'll drop an anchored VWAP on the day itself. So you're gonna get a bunch of different little spots there. You can always do this as well. I tend not to do this, but you can drop one right there on the bottom. You can VWAP yourself to death in here, guys. But what you're gonna see is you're gonna see this bottoming from here and then from here and then how you're doing. And you get into what's called a VWAP pinch. Now, what tends to happen with these, and you wanna watch, as you get closer and closer to those, you'll start to see how you're reacting. Once you flipped, it just stayed up. I had a short on here. I did not get involved. Let me see what time it was. I don't think I got involved till about 12 o'clock on the long side. And the whole reason for getting involved on this was that they had an internal meeting and they're trying to explain it to people. And it doesn't look anywhere near as bad as they're thinking. But once we got in off that news and you could just see it move, it was a real simple trade. This became our target price. And once we saw that, that was pretty much it. Here, I can walk you through parts of this really quickly, but you're going to want to watch this. Now, for time's sake, I'll just do it this way. It'll just be easier. But right at the stock, when we start breaking out from this level, coming straight across right in here, we just start buying. And my target on this trade is relatively simple. I want to keep a lower day stop because I think it could be an absolute monster the way that it was trading. And I want to note that this anchored VWAP area becomes an area of interest for me. My target on this was roughly around 254. And I always would suggest that you come up with a target and then how you're going to use your stop on your option. So we paid 5 for the October 11th 250s, and then we had stock as well. Speculative in nature, but based upon the way that little conference call went, you started to see positive momentum. You actually started to see some volume. And then as it's trading, we're actually scaling out. When I'm telling them here, and this is important, if you look at the options, you could drive a truck, like literally drive a truck through the spread. Whenever you see that, put orders out there above the ask on when you're trying to get out, because if the trader or the option market maker gets into trouble, they will grab your option. And that's exactly what you want. They will literally go out there and grab your options. Now, is there order above the ask? Because it's a thin market, and that's what I tend to do, and it tends to work. And then these are just like the follow-up trades where what I'm doing is, as it's trading up and as we're making money, all I'm doing is just getting out of the trade. And what I want to do here is I want to stay with it. So in other words, you got to my level, I made $10 on the trade, I want to trim it, I want to move the stop up to break even, especially in this kind of environment, and go. And then this, of course, is just me trimming some more of the stock. So what I'm doing on this with the stock and the calls is, as it's going in my favor, I'm not waiting for it to reject. I'm assuming it's going to reject. That's a really big difference, guys. I'm assuming that it's going to reject. I'm pulling money out into it. Just assume that it's going to fail. Everybody knows this level's there, right? There's a reason this level's there, because that's the average of where all those people are. So if I can take advantage of that, I'm going to want to. So you might want to watch that a couple times. I might actually do a video on it. But so this gets us to the point that I really want people to get. You have a battle going on in here on the Qs, okay? And you really want to watch this battle. A lot of this is really being battled from smart money, dumb money. Let's take a look at that. Now we're seeing a development in smart money, dumb money. And as people are aware, we really refer to this as smart as institutional and dumb as retail. And the reason is because smart is calculated by using institutional level research, or basically order flow would be a better way of saying it. And dumb money is through retail order flow, such as ETFs. And one of the things I want to point out, and it's starting to happen pretty wild, and we just went over this, but what I'm saying is pretty wild. You are reversing really fast here. So in other words, we are seeing retail just pile into the market here and getting really frothy, which there's nothing wrong with. Every time that retail pops back over here, you'll see the market goes higher. So there's nothing wrong with that whatsoever. We are seeing that institutions cannot get out fast enough. So we are seeing institutions just dump at a really big level here. Now, to take a look at this and just really drill into this, let's just look at this on a 1 year. Look at this spread and how fast that spread is happening. And if we look at the 1 year, we can see, all right, well, when did this happen last time? Well, we could argue it happened here, sold back down and got wider and wider. And as that spread widened in December, that actually marked a bottom. So are we setting up for something in November? I'm not really sure, but here's what I would say to you. The market is flat right now, and this is what I would take from it. The market is flat right now, and institutions are dumping. Institutions cannot get out fast enough, and the market is flat. And I think that's very telling, because when they come back in, even though it'll be like, oh, well, retail's fully invested, retail can just stay here. And as long as institutions come back in, you're fine, because it really boils down to the spread. And I think we'd be remiss here if we're not pointing out that this is the fastest distance that you've had all year. Now, obviously, you've had greater distances between the two, and we'll explain why this is important in a second. But what you're seeing here is we never moved this fast away from one another. It just did not happen all year long. And it's happening now. And the only other time that we have like that really marks that April level. And once we saw that, we just pushed. Now you could argue that, oh, well, we're over, so it doesn't matter. Once institutions come back in, and this is an excellent example of what we're going through right here. See how we went sideways and it really didn't bother, it came down a little bit. As long as institutions come in behind us, and that's why it's so important to refer to this as institutions and retail. But once you see this, all they did from April, it was on to July, it was on. And the only reason that we sold off here was because retail got out faster than institutions got in. If we just go sideways, which we very well could do into the end of the year, something like this, then this is exactly what we could be dealing with. What's interesting is this was actually some kind of bottoming pattern, but you need to look at this as a spread. The spread tells you what's really going on. This spread here, which is just smart money divided by dumb money, and you get a spread, and this is where everybody is giddy, and these giddies tend to mark bottoms, right? Everybody's giddy, and then they tend to mark bottoms. It's pretty obvious when the bottoms are. And it's very obvious when the tops are. It's not when you cut these lines. It's when these lines start reversing back through that red and start turning that you can get tops. And you got one here, and you'll start seeing that, right? Hitting here, they can form tops. You're not really there, and it's not all the time. Nothing is all the time, but it's worth pointing out. But you just crossed here. So this can continue to drop. For example, last time this dropped was from May to September before it turned. Now, just to kind of, again, put it into perspective, because that's all we can do. All we can do is look at the past, over the past couple of years, and see what happened. So by the time you flip that level back over, that marked a high. And you can kind of get a sense of what I'm suggesting here. Once these flip over, they're kind of marking those potential high levels. And again, you can see there was kind of a high there, not really. And again, here as well. So what we're looking for is to understand that, yes, we cracked here, but this crack, you could stay under here for weeks, you could stay under here for months, and it could just rally. Once we know we're near here, the way that you should think about this is, okay, well, we cracked here and we kept going higher, and this went on for a couple months, but we're probably at the tail end before this starts having some kind of correction. Now that could be in 2 weeks where it turns, or that could be the end of the year. But you're at the tail end of something. You're not at the beginning of something as you were here. And I think that's the most important thing for you to take away from this. For example, if we look at it this way and say, that is the beginning, and the smart money move beginning happens at the green line inversing back through, right? If we use that as a trigger, let's say, and then we say, when is the time to start selling? Well, that's the time to start buying. And then you just say, okay, and just mark those off for a second. Let's get this to another line and then kind of go from there. Go, okay, well, that makes sense, right? That tends to be playing out for us here, doesn't it? And so we say, all right, well, that tends to make sense there. Then where would we look and say that where becomes that sell? And I think that this is where it gets super interesting, where you just would say, well, when we hit this line and we start going back on, up, that gives us somewhat of a sell signal. Hit that line, and of course, you have to do with my basic Chartlng drawings. But what you're getting here is, yeah, that's really giving you some kind of sell signal here. Now, you can always comment on this. I'd be really interested to hear what you guys have to say about this. But I think that's really very clear, and you're at the tail end of that right here. So we'll see how it plays out. What has me so fascinated by this is the speed in which it's moving. And that can continue for some time, but we do need to be aware of this. So right now, we know that semis are holding, we know NVIDIA is holding, but what I would do is I would really just understand that this is your range. And since that end of quarter, this has been our range. We just need to make sure that you're holding this downward level in here, this 477, and you can see this is in a couple different spots. It's a really critical area. You can see the higher or the lower highs that are in here, and 488 is really that breakout area, and maybe that doesn't really happen until non-farm payrolls. We'll see what tomorrow brings. That is it.